Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, well, we got a lot to discuss. We're going to talk about oil. We're going to talk about Bitcoin. We got a couple, well, one blockchain stock getting crypto stock, whatever you want to call it, getting delisted, but a couple more trading up this morning. That's a fun little dichotomy. We have some earnings trickling in, Bed Bath & Beyond from yesterday, Delta Airlines from this morning, and we will be joined by two guests. Our first guest will be at 8:15. Tracy Shuchart will stop by. She is a oil trader, so she'll be excellent to talk about yesterday's action with. And then at 8:50, we are going to be joined by Jeff Hirsch, the editor-in-chief of the Stock Traders Almanac. Joel, what is doing this morning in the S&Ps?
No war. We got a rally. We're trading up 14.5 points at 26.55.50. Just a buck off the pre-market high. This is where we stalled yesterday, midday, a couple times. So look, keep an eye on this area. Above that, yesterday's high, 61.25 and 66.25. So that consolidation, that tight range that I was looking for, it's kind of coming to fruition. Crude down 42 cents. Big move yesterday off geopolitical turmoils. Traded down 43 cents at 69.39. We're keeping an eye on yesterday's high, 67.45. Couldn't get there today, 67.33. So there's your big area in the crude oil market. Gold, I didn't hop in yesterday on that rally and kind of glad now, down 11.20 here at 13.48.80. Silver trading in the red by 17 cents at 16.59. But the big story and the reason Dennis is really excited is Bitcoin futures are trading up at $860.
Wow.
$880 at 7,800. Saw someone put a comment in the chat here. Dennis and I will talk about it technically here. Found a lot of support at 65, 6,700, and they just couldn't bust it through there. So a little bit of relief rally in Bitcoin.
Big pop here for Bitcoin. This just happened about an hour ago. It was hanging out, and it's been hanging out for a while, and boom, pops $1,000 just like that. So we know these things can have these pops here, and it's been in consolidation station there for a while. I don't trade this. I don't plan on trading this at all, but if you are trading these things, different headlines can drive price. I'm not sure what the headline driving is this morning, but I'm sure somebody said something somewhere.
Yeah, something regulatory. Who else? 169. Bitcoin has been suffering from tax-related selling in the run-up in the U.S. tax deadline for April 17th. Traders, I don't know. I'm not sure how the reporting and taxes is going on that, but 8,000, 6,500 to 8,000, 80 is a high in the futures. Dennis, overall, a little bit market talk here. We're calming down. And I think me and you and, Nick for that, trying to stay bullish here. We're going to have some big numbers tomorrow, but inching up towards the top of the trading range that we've been talking about. But we're holding now.
Yes.
That's important.
I think we're going to break out here eventually. We have been talking about this potential breakout for 3-4 days. We keep getting up there and we sell off. Keep getting up there, we sell off. You have to keep trading the range until the range proves that it has been broken. And the range we've talked about every single day is 258 to 266. Every time we get up near 266, we find sellers. Every time we get down to the 258, 259 area, we find buyers. I don't see, any reason for that to change imminently here. But we get up over 267, then we open up to 270, and then we can start talking about a real breakout. But so many individual stocks have already broken out or are looking like they're ready to break out. I mean, Netflix, we've talked about, it's up another $6 here this morning. It broke out over the $300 area, so obviously it's a driver. Facebook broke out of its range, which had resistance up at 162. It's trading up at 167. Twitter, which we talked about as potential breakout, did sneak its head above 30 a couple days ago. There's a potential there, it could get above 30 there again. I mean, you go to the big guns there, and if you want to look at like the Amazon has not broken out, but it looks itching to go. It needs to get to be in breakout mode. It really needs to get above 1460 though, trading 1441. So it's still kind of in the range. Microsoft, same story. All these charts look the same. Microsoft has multiple highs, 93.28, 93.29, 93.17. Those are your three highs from the last 3 days, all within like 12 cents of each other. So, I mean, resistance very well defined here still. So it's hard to get really bullish until we can get above these resistance points there. But I just keep feeling like if we keep bumping our head up against the wall, do it again and again and again, eventually we're going to break through it.
And just a quick note, when you think about all the events and everything that happened yesterday, supposedly bombs flying over Saudi Arabia, threat of war with Syria, possibly extending to Russia, the threat of tariff wars, very bearish Fed minutes, and more turnover in the White House. And we sold off into the close, and now we're green this morning. So could be a major change in sentiment here as we move into earnings season, and that's what's supposed to move stocks anyways. But we got a stock reporting earnings, and is the retail disaster, is that back upon us here with Bed Bath and Beyond?
Oh, it's ugly.
Oh my gosh, Spencer, give us that report.
Reporting yesterday, Q4 adjusted EPS $1.48. That beat the estimate by 9 cents, so good for them. Sales $3.7 billion versus $3.68 billion. So the Q4 numbers came in higher than the low expectations. They did also report that comps for the quarter were down 0.6%. But the real story here is in the guidance. What did they come out with? They said, their fiscal year 18 guidance. Q4, very weak fiscal year 18. So EPS in the low to mid $2 range. The estimate was $3.03. This is for the fiscal year EPS, and that is the driver this morning.
I mean, you can look at that and say they're making $2. Things trading 17. It still seems cheap on a multiple basis. Dividend is now 3.5%. So, but I think it's a value trap because I just look at these stores, and I've wondered this for years on Bed Bath and Beyond. When the stock was so hot, even at like 70 and 80, you go into these stores, they're huge stores. You don't see that many people buying stuff. I mean, they're not putting out, numbers like Walmart, that's for sure. But I guess for a number of years, maybe the margins are better, whatever it is, they've been able to, find their niche and, obviously make money, and they continue to make money there. But I don't know all this stuff. Joel, you like these stores when you go in there, Bed Bath and Beyond? What are your thoughts here on the store itself, not the stock?
I think we're a broken record on this one. Because
we've never liked it. I mean, we were wrong in 14 and 15 when it kept going up, but we've been right the last 3 years. I don't think we've ever liked triple BY. Oh, although for that matter, we never liked double BY, and we were dead wrong on that one too. I think me and you just have not been in love with the retailers for a long time. I mean, even me, I have a long-term investment portfolio. I have 100 stocks in there. Ask me how many retailers I have.
How many retailers?
Ask me how many.
How many?
I think 0.
Oh.
I don't think I have one retail stock. I had Kohl's at one time, but I sold it on the pop, and then I didn't rebuy it when it had the drop, and I should have. But I don't think I own one retail stock in my 100 out of my 100 portfolio. People will say, "Wow, how do you have 100 stocks don't own a retail stock?" Amazon is the reason.
There you go.
I had Walmart for a while too, and Walmart interests me. Walmart's a possibility to get back in there, but it's hard to own retail stocks. And I know we had the big pop in November and December in a lot of these retailers, but a lot of them, some of them have held up, but a lot of them have given a lot of it back.
Well, the main thing I don't like about the stores is once you walk in, like you can't get out. It seems like everything is in the back of the store, and then you got to weave your way around. But I go there, I buy, Lisa asked me to go buy, pet carpet cleaner or something. I go there, I buy it, I buy one thing and I leave. So the pre-market chart, I guess the good news is it's finally stopped going down. Someone wants to bring in some stock here around the $18 level. 1767 is your pre-market low. If you want a reset of the financial crisis here, 1812 was your low in December of 2008. So terrible relative performance. Light buyer at 18 to cover shorts. As far as going long here, going to need a lot more reason than looking at a monthly low from December of 2008.
Just think about that, though. How many stores, how many companies were in so much trouble during the financial crisis? You are back to those levels there. Edge Seeker in the chat there, I think he's a bright trader, was a PIR he was just talking about there. And I always talk about that one too. Remember it got down to like a nickel during the financial crisis, or a dime, and it went to 25 bucks after that. The Wicker Chair Company, Joel. 25 bucks after that.
Incense too. They sell incense.
Oh, incense. Yeah, a lot of candles in there.
And paper flowers and stuff like that.
Well, it's back to $3, so I think it's back on its way down to I don't know if it's on its way to the 5 cent area it was again, but a lot of these retailers, look the same here. That some of them have held on, but I mean, you can even look at Al Brands. This was one that I actually regretted because I bought it and then I sold it too soon. I bought it back in like October or September. And then I sold it I went from like 37, I sold it like 41 or 42. The damn thing went to 63 bucks, really overshot. It's back at 37. I mean, the dividend on Al Brands is Victoria's Secret's 6.35%. So you look at a lot of these retailers and you say, man, there is value here. And there is. If you think Amazon's not taking over the world here and you think these stores can figure it out, maybe the online shopping a little bit better, there's value here. But I'm so scared because when I go to the mall, and I barely do that, but the malls that I do go to, those seem like ghost towns half the time. So I know you get on a weekend, they can get busy there. But if you go during the week, there's not that much. Mall traffic's still not doing that great. You can even talk about what was your stock, Joel, that you wanted to short? The mall retailer, TCO?
Yeah, Taubman Centers.
It's come back.
Yeah, it has. It has.
Bucks. You liked it short at 80 though, so you should have did it.
That's a long time ago. JC Penney, 350. Well,
those are just dead stories.
Yeah.
I mean, JC Penney's and Sears are in their own trouble there, so they fall in the Toys R Us category. I think eventually Sears and JC Penney probably don't survive.
And Kmart, KM. That's not.
Well,
no, it's not around anymore.
They are not around.
I had
Kmart. Who did buy Kmart?
Sears.
Was it Sears?
You know what? I had 1,000 shares of that stock when it went under. I think that's the only stock. And then they did that magical, reorg or whatever with Sears, and I don't know. I never got my money back. But that's one of the few companies that I held that I held to zero, just hanging in there. But SS Kresge. Oh well. 814.
Well, we went on a long tangent. Just one second before you go. BBBY. So sympathy plays here because it's down significantly here. I think Williams Sonoma, WSM. It's not traded here this morning, but I would bet Williams Sonoma is weak on this. Even you could reach a little bit, and I think about a Restoration Hardware even potentially. And Restoration Hardware sets up well. If it ever got through 85, there's a gap in the chart. So I kind of like RH. Sorry, Jason Raznick. I kind of like RH right now from the short side.
You should.
If it can get through 85. It could be 80 bucks in a heartbeat. There's a play there, shorting RH through 85.
You shouldn't have brought that chart up to me, Dennis.
You like this one?
Oh, I love that. I love that.
I like the setup here. And now you got Bed Bath & Beyond. And Bed Bath & Beyond completely different, but I'm reaching a little bit with it here. But I don't know. I think RH could take out that 85 and be at 80.
Okay.
Short-term price target 80 bucks.
All right. Probably next print. It goes 85. The next print will be at 80. Okay. We had a request yesterday from Angie Baby to bring on Tracy Shuchart. She's an oil trader, and I bet you she's been very busy. So let's take a quick break and bring in Tracy. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined on the line by Tracy Shuchart. She's a commodities trader and better known as Shy Girl on Twitter. Tracy, how you doing this morning?
Good. How are you?
Good. So, boy, tremendous rally here in the oil market. So, want to break it down with you a little bit. But, first question, I mean, would you classify yourself more as a fundamental trader in crude, technical trader, or just a 50-50 mix of both?
Probably, a 50-50 mix of both. I mean, I would say for intraday trading, it's more based on technicals. But if I'm swing trading or looking for larger moves in the market, then absolutely fundamentals will come into play.
Okay, so I think was it Monday night that the Saudis come out and says, hey, they're gunning for $80 oil. They didn't put a price. I think that's a number Goldman Sachs has as a target, a near-term target in oil too. Now, something like that, I mean, if you're just trading the news and everything, I mean, what do you do? If you're short, do you hit the buy button, you reverse and go long, or were you long?
Well, they sort of backtracked on that, but I was already long because the technicals were set up for that. They're kind of in a daily channel. And we kind of bounced off the bottom. So I was already long. It's funny how a lot of fundamentals come about with it. You see a technical move, but not only that, but I mean, we have risk of Middle East contagion. We've got Syria, Yemen, KSA. We've got this deal with are we not going to pull out of JCPOA, the Iran deal? So we've got a lot of geopolitical issues at hand as well. So factoring that in, I was also looking for a place to go long. It's kind of been a push-pull. So we've had one side where we've had this trade war threat, which is negative for commodities in general, except for gold. So we started to see on those trade war fears, we started to see oil come back off, and then in came a bunch of Middle East risk, and then we saw a bounce. So that's kind of how I was looking at the market and trading it at the time.
Okay, so you had a good position on, and congratulations. So now I'm looking at this, and man, crude. There's two things I want to talk to you about crude. One is, I mean, on how many days or how many occasions are you just focusing on that 6 p.m. open? Like you have a strong day, you maybe, you settle, let's say 15, 20 cents off the high, you open unchanged, maybe go down a nickel or a dime, and then boom, you wake up in the morning and 60, 70, 80 cents higher. Do you key off that 6 p.m. open, or do you use some longer term technicals for your trading?
Well, not so much. If you've noticed, it's kind of changed a little bit. It used to be a lot quieter, during the evening, but since Asia now has opened their contracts, and this is just for the time being, we'll have to see farther out, if this pattern continues. But what I've been noticing is that they tend to bid it up at night. So you kind of see these moves, between, say 9 and 11 Eastern time, my time, where you'll see a big move up, 50, 60 cents. Last night was a prime example. Whether or not that pattern continues, I don't know. We'll have to see, but it's definitely a pattern that has started since that contract was opened.
All right, we got some people in the chat that obviously know a lot more about oil than I do. TT Mac wants to ask you about sour, heavy, and light sweet. Will there be different supply-demand issues more differentiated as we go forward?
Well, absolutely. I mean, there's, Brent is the heavier sour crude contract. WTI is obviously the light sweet contract. The thing is that demand depends on how you can use it. Now, with the lighter sweet crudes, the United States crudes, you can't refine those directly into oil. You have to mix them with a heavier grade crude. So that demand differential is going to be different than, say, Brent, where you can refine that straight into products.
Great answer. Angie Baby is asking about the Petro Yuan. Thoughts on that, please? So
the Petro Yuan, I mean, the Chinese contract that's now traded in yuan, it's a medium grade, so it's different from Brent contract and the WTI contract. So it's going to have its own set of demand on that contract. Really, I mean, it's traded in yuan, but when everybody else is quoting it, they translate it back into dollars. So I don't think that, I mean, as far as it's a contract, it's traded in yuan, it's a different grade, but I don't think it's a new world order, or it's necessarily going to, overtake WTI or Brent.
All right, so now looking, at the move here, and another thing I've, been observing the technicals and crude for a while, double tops, double bottoms, triple tops, triple bottoms. We have a potential double top forming here, 67.33. The current high, 67.45, was the high from yesterday. High close of the move, 66.85 or 66.82 from yesterday. Who knows what's going to happen today? And boy, that's all those numbers where we're currently trading is all around the former highs of the move here. So just what are you looking for a continuation pattern here, or do we got a little work to do on the downside?
Well, I mean, we've definitely kind of made a disaster below, technically speaking. So, I do think that we'll probably come off as these geopolitical risks move off. Just this morning, the State Department issued that now the U.S. is going to try to work with its allies on the Iran deal and fixing it, saving it, which is kind of different than what they have been saying. So and people, traders obviously going to be looking at what happens in Syria and whatnot. As far as technically speaking, we are in the daily channel. We hit the top of the channel. We came off, we've come off over $1 or so. So not that those, I expect some of the downside to sort of correct itself. Not saying that it can't go higher in the future, but we kind of left a disaster below, technically speaking.
Hey, Tracy, Dennis Dick here. Thanks for coming on the show. Just a question for you just on your trading style. Now, you're following crude so closely. Do you trade the stocks too? Like, do you look at the XLE, XOP and trade those off of crude? Do you go into individual stocks here? Because I've noticed just, crude has really taken off, but there's some of the big fish like ExxonMobil, Chevron have kind of lagged the crude rally here, at least the recent rally. Do you have thoughts there?
Well, what you've noticed is that basically stockholders have been wanting to hear buybacks instead of capital expenditures. So if you'll notice, back in March when companies were talking about this, you'll notice, for example, XOM came out and had this big capital expenditure idea, and their stock immediately tanked. Whereas Hess came out and said, we're all about buybacks and dividends, and their stock went up. So I think investors right now, as far as crude stocks are concerned, I think people are looking to hear buybacks instead of expenditures because they're so worried, they're still kind of burned on, the last couple of years.
What about thoughts on the Canadian dollar? Because that thing moves with crude. Obviously, Canadian dollar's had a little bit of a rally with the most recent move up with crude. Do you follow the Canadian dollar as a trade-off?
I follow it a little bit. I actually follow euro more.
Okay.
Because usually what happens is in foreign exchange, when Saudis go sell oil, they'll hedge with the euro. So I actually follow that more, and I actually think it follows crude a little bit more closely. And that's coming off of the highs as well.
Tracy, you gave us a stock. I don't know. We asked you about a couple stocks. I thought there was like a driller, or this was when you were on. I know we had you back on in February. You had one favorite. I don't know if it was a smaller stock, a drilling stock. I don't know if it was overseas or U.S. Do you remember? Do you remember what that was? Jog my memory a little bit.
I can't remember off the top of my head right now. I don't trade stocks, so
okay.
You know, I mean, I do follow them, but they're not something that I trade. I mean, I incorporate everything that's in the industry in evaluating and making trade decisions, but I don't actually trade stocks.
Okay. All right. Well, no more questions from the chat. We've been on the line with Tracy Shuchart. She's a commodities trader, sizing up the oil markets for us. A great follow on Twitter at Shy Girl. And Friday, after that closing bell at Friday, she always has a good tweet for the weekend. So thanks a lot, Tracy. I think it's something like pencils down, drinks up, or something like that.
Nice down, drinks up.
Yeah, exactly.
Nice.
Thanks, Tracy. We'll talk to you again.
Thanks,
soon.
Tracy.
All right. Thanks for having me on.
All right. Awesome interview. SPOO's finding resistance and at 26.55. That held intraday a couple days yesterday. That was also Tuesday's close. So there's a little bit of a bogey on the upside. Dennis, I think we covered one stock in the first 15 minutes here.
We went on our tangents. It was all about Bed Bath and Beyond. Let's go to Delta. DAL flying here this morning on their earnings. Well, I guess it's flying. It's up a buck, but everybody has been hitting these airline stocks ahead of their reports here. You get Delta got hit too yesterday. It is bouncing back here this morning. So again, when the stock chart looks like this, before you even look at the earnings report, you know that if they say anything, okay, it's probably going to pop. So what did they say, Spencer?
74-cent EPS that beat by a penny. Total operating sales of 9.96 versus $9.84 billion. So they beat on the Q1 numbers. As far as Q2 guidance, EPS guidance coming in line, and total unit revenue, excluding refinery sales, up 3 to 5% year over year. So it just all in all, generally in line.
Good enough. The only thing they couldn't do was miss big time, and they didn't do that. So you are seeing a pop here. It was trading down a little bit ahead of the number last night, and obviously those traders are on because the thing gets a pop here this morning. The one thing, though, I will say is these airlines really are not in favor. I mean, you can look at all the majors. Delta, obviously not the prettiest chart. LUV has been straight down here for 2 months. UAL, we know they've had their issues. They had a tank job yesterday. They lost 5 points in the last 2 days. SAVE is another one there. That I had in my investment portfolio at one time. Glad I sold it. I sold at 44. It's down here at 35. I like it down at 30, but we're a ways away from there. And obviously, Delta itself is not had the greatest month either. Thoughts, Joel, as you do get a relief rally here, but a lot of overhead supply.
Yeah, I sure do. Your pre-market high stands at 53.04. That exceeds yesterday's high at 52.54. Better hold above that, or you might be taking a look at that double bottom at the 51.40 area. If they decide to juice it a little bit more, I'd keep an eye on 53.50. That splits the two highs from Tuesday and Wednesday, 53.38 and 53.70.
Which that jobless claims come out. Do you have those numbers, Spencer? Throwing you under the bus here.
Yeah, continuing claims. Initial claims for April, 230,000. 231 was the estimate. Continuing claims for March, 1.87 million versus 1.85 million. So nothing too crazy on either end of the spectrum.
S&P is getting a slight lift on here, but not really anything of note. Let's go to imbalances here because we do have some that are got some big ones this morning. General Electric, 141,000 a sell. It is trading up in the pre-market there. Who was that had the report? Cowen? Was it Cowen that came out with a negative report yesterday and talked about a $12 price target, I think, on it, or saying they're only going to make, they said the dividend is not safe. So you had Deutsche Bank beating up at 29. Now Cowen's beating, I think it was Cowen beating it up now at $13 and saying that they don't like it here either, and basically the dividend could get cut altogether. I don't know. It's not good news for you or me, Spencer. Obviously, I sold half of my GE up at 17. I wish I would have sold the whole damn thing because it has not I just don't know what brings the stock out of the doldrums. It seems like every time an analyst comments on it, it's got more problems. I just think, everybody's got to be fired there, because this is getting to a point where you've got one of, the best brands in the whole world just being totally destroyed and tarnished here in the last year. And it looks like, they just can't seem to turn it around. They need somebody else to come in there and right the ship.
Well, they are trying to, sell off like a bunch of some of their units, right? So
but that's what you do when you need to raise cash. I mean, those are, like a Valiant situation where they had to sell stuff off because they need cash all of a sudden. I mean, this is not good news that you're all of a sudden selling some of your businesses, because you know what? Nobody buys the crappy businesses. They always buy the better ones. So,
yeah.
And then you get stuck with all the garbage. I mean, it's tough. I think this is almost one that, and people ask me, $12, how can you go wrong in GE? Well, people were saying the same thing at 15, at 18. I mean, it's ugly. I've actually talked against my book here on this one for a while. I think I continue talking against my book. I mean, you do have support here, Joel. So, the bull case is
that. Yep.
You got 1273, 1279, 1280, got all kinds of lows. The headline risk, though, like just imagine that they do come out and slash the dividend. I mean, things are going to open up at $11. So and it seems like whenever they come with a headline, it's never good news. When's the last time GE actually came out with a headline that the stock popped big time off of that this was good news?
I remember when they changed CEOs, and I think it popped to like 27, 28. I can't even remember how far back that was. That was
the CEO or CFO?
They got rid of Immel and they replaced
Well,
Immel. Yeah. So that was when it popped up to, I think that was back in July of last year. It stuck at June or July. That was the last time it got news, and the change has not helped. I just want to touch on here, bullish in the Google chat. He's talking about CLDR, Cloudera. That stock got clocked. Had its first green bar yesterday, so that's a good thing. Trading up 20 cents. You have an out. 1257 is the low of the move. I talked a little bit yesterday about seller's exhaustion, about how the volume had really tapered off since that big down day. So I don't know if it's any brand new buyers coming in here. It's just kind of lack of sellers, and they're juicing it. Trading above yesterday's high. So like to see it stay green and, go up. Big number. That gap down day, 1438. That was the high, and that was also the former area of the all-time low. So for some real green in this, you need to get above 1438.
And there's news here on this one, and this is why it's getting more of a lift here after the bell. It was disclosed that Michael Stanke, who's a board member, bought $324,000 worth of stock. Average price is $12.99 back on April the 9th. So just a couple days ago, you've got board members now buying the stock. I think that's going to help the stock here today. I like this stock for a 2-day move. I think this stock could actually pop 3 or 4%. So I know we're only up 1.5 here. I think there's a play in here from the long side and in CLDR, at least just for a day trade. But I think you could have a few people, chasing this a bit up. So we'll see what happens here today. But I like Cloudera as a day trade today.
Interesting note coming out of Ed Parker here. He says Intel owns a lot of Cloudera.
At a certain point in time, this is what you need. Like when a stock goes straight down, we talked about this yesterday. I'm like, you got to wait for the first green candle. Well, we got it yesterday. And not only that, now we get news after the bell. You got a board member accumulating a major, position here. So that helps. People want a vote of confidence, and that board member just gave it to you. So here you're going to have people coming in and possibly trying to bottom fish in this one. So I think this thing could see $14. I don't know if it's going to see it today, but I think it could see it in the next couple of days.
All right.
That being said, that trend is still ugly, and it's still to be determined. So everything gets relief pops, and that's all I see this as is more of a relief pop, as opposed to, this long-term great investment opportunity. I don't follow the story, though, the fundamental story. I just know when you get an insider, need a vote of confidence, it's getting that. It kind of equates to, the potential for, a little bit of a short squeeze here. And not only that, maybe a 2-day move.
And, it just shows how, when stocks, get into a pattern like that, you need news. And, that's why you need your Benzinga Pro to keep up, on the news. The street has been very quiet on this one. I don't even know if let's see how many people are covering it. Actually, I went to the analyst ratings. Oh, it was, had a couple downgrades in April. Last thing was April 11th, and not widely covered. And not widely covered by Bank of America, JP Morgan. So that's the next thing that you'd want to look for is maybe, an upgrade or initiation of coverage in it, but who knows when that's going to happen. All right. What else are we looking at here? Talking retail, old traders popping in with Macy's. That was one of the stocks that we did not mention. We were talking about the retail. Boy, a lot of support here at the 2880, 2890 area. If you can hold that, maybe now mount another rally. In order to really get going on the upside, you need to clear $31. But after that good report, had the move, filled the gap. That would have been the place to buy it. Now it's certainly trying again. And AJ Penn is asking about Mattel. Was it Mattel we were talking about yesterday, or was that the day before?
Yeah, we said we liked it for the 2-day move, I think, too, on the show, and it did. It got the big pop there. It was upgraded, though, yesterday, so you knew it was going to get a pop, and that was a huge move. I mean, you had a shot, though. This thing didn't open up that much.
Nope.
So if you bought it right off the opening, it only opened up about a dime or 15 cents and blasted off 60, 70 cents right in the first opening candle. So if you were quick enough to get in on the cheap there, you had a shot on Mattel yesterday. Now you're chasing.
Yeah, now you need continuation. 14.49 yesterday's high. Also see a pesky high at 14.58. So clearing 14.50, you may get another look at perhaps $15.
I just want to go back to Old Trader's comment on Macy's, and he's just saying, the yield is 5%, the P is less than 6. You know what? You could say the same thing almost about Bed Bath and Beyond. You could say this about a lot. I think all these retailers still look toppy to me. Yes, maybe they get a pop. I mean, Kohl's got a huge pop. I still like Kohl's better. JWN's popped up. I mean, Macy's. I just can't get on this because the stores are so big. I think there's more issues here. And I think there's a potential not for them to cut the dividend, but there's a potential that they're not going to beat the next report. And I just think there's still a lot of Amazon eating the lunch here. So long term, I know they look attractive from a valuation perspective. I still think they're all value traps. So staying away from all retail stocks in my long-term investment portfolio doesn't mean you can't trade them. And Joel gave you a tradable level, and he's telling you if the thing can hold above 28.67. Now, that being said, too, and full disclosure, I actually have Macy's just a short-term day trade long right now, just coincidentally from an overnight trade, but I'll be selling that probably on the open. Just remember, you do have some Bed Bath and Beyond disappointing numbers here. So not that Macy's is anywhere related, but if the whole retail sector starts to get dragged down by that, just be careful buying retail stocks. I don't know if it's going to spill over into all the retail stocks. I think it would just spill over into a Williams-Sonoma, which we already talked about, but I'm not sure it has a potential to spill over into other retail stocks as well. So just be cautious if you're buying any retail stocks today.
Dennis, the next stock from Matt and Beyond, stock that you're in, Celgene, kind of a
dog.
Yeah, sleepy chart here, long consolidation. I mean,
these have been value traps too. Celgene, one of the biggest investments in my investment portfolio. Obviously, I'm in it from a long time ago. I bought $27 originally, but I added more at 95. I wish I wouldn't have added more because it's down at 88. Anyways, my cost base is up to 50 because I added more. But 88.90 is where it's trading right now it's where it's bid right now. The pre-market 89.26 is where the last trade is. Got a lot of resistance up of 90. It's bucked its head up there a few times. Needs to get up above 91.92. I always like to look at the IBB for a better feel, and it's kind of in the middle of nowhere too. Although if the market goes, these are going to go there as well. XBI has performed a little bit better. Obviously, XBI owns a lot of smaller biotech stocks. We know there's been some M&A action there lately, so XBI has outperformed IBB, which is obviously a lot of Biogen, Celgene, and the bigger guns are in the IBB. So that's the difference there. But there's life here. There's value. I do believe there is value here, and I think long run, if you're buying Celgene at $89, I think you're going to be happy with it. But short run, they still remain out of favor, and the wild card, I'll say it again, is still Trump with drug pricing.
To me, it's all about $91. You had a couple highs at 90.99 and 91.14, and you also had another high right at 91 even back on March 16th. So I still think there's pressure on this to the downside. You clear $91 or get a good drug trial or analysts come out and say something. Still in consolidation station here. From Mike GG, Facebook. I mean, anybody that was looking for, bad testimony from to me, the news was already out. they already slaughtered the thing on the news. I mean, with the kind of money that he has and the company has, is he going to say something bad, or his lawyers are not going to have him prepared? That's the way I'm looking at it. Heading into trading up $1.02 in the pre-market. 167.10. I'll just give you technical levels on this. 167 was the high on the day that it lost $6, and that may $6 or $7, maybe when initial news come out. But after that, it's open ups to 170.27. But I don't think it's going to zoom right there. I think all the people that bought it for a swing trade between 160 and 150 may be looking to peel out here between 167 and 170. Dennis, any comments?
170 major resistance on it. You're almost there. You're $2.50 away. I think you could see that. I think that's where it's getting for. So I think there's a day trade up to 170. I think past that, I think it's going to be a little bit tougher sledding there, because you do have multiple highs there in mid-March. So 170 would be my target if I was long this thing right now.
Okay. Also for you longer term traders, man, I can't believe Facebook got to 195. That got to 195.32. We broke down, let's just call it 150. So that's a 45-point move. I'm still talking Facebook. So 22 and a half of that, 50% retracement takes you to 172, 173. So if you're looking for even more on the upside above 170, could easily do a 50% retracement of that big break off the all-time high.
And BTFD all over this. I mean, if this thing pulls back, people want to buy it now. They're regretting not buying it at 150. I'm one of those people that are regretting buying it at not buying it at 150. So it gave you multiple shots down there. And you know what else? When these guys go on, and my buddy from Bright was saying the same thing, when you have these testimonies, it always seems like they sell them off and nervous ahead of them, and then when the testimony actually comes on, they almost always seem to pop. So we saw the big $7 pop, when Zuckerberg was testifying there, and obviously he did a good enough job that they didn't have a meltdown, which maybe the market was thinking that he could have, and that was the big pop. So it seems like it's kind of like a sell on rumor and then buy it on news type event. When the actual testimony happened, stock popped.
And I was going to say, just realistically, like, what are they going to do? What are they like? They asked him at one point. They asked him how he would regulate his own company. I mean, what are they? What are you going to do? Nothing. So,
Wait, the platform
there's going to be other,
right?
There's not just Facebook, and obviously, there's worries about Google. There's worries about a lot of, potential, data. What are they doing with the data? Who's getting their hands on the data? They potentially selling the data. I mean, this isn't just a Facebook issue.
Joel, the platform is free. Ask a question.
How do they make money?
Great question. I have no idea.
How do they make money?
I have no idea.
It doesn't make any sense.
Doesn't make any sense.
How do you make money if you don't sell anything? We sell ads, sir. We sell ads.
Maybe we should start selling ads. Maybe that's maybe the way to
that's
go.
what we're supposed to be doing. Yeah. How do we make money on this show? We got to figure that. We don't even advertise to you guys. We're just silly here.
All right, we got to
look at this whole thing. Well, I guess I got the couple banners behind us there, but we're advertising Benzinga Pro, and I'm advertising Bright Trading a little bit, but.
Stock Hunter says close to a death cross, the 50 and the 200-day moving average. I mean, what's there? The triple death cross and the star cross. So you're a longer term trader. Something to keep an eye on.
You know what? And people use this and they'll talk about it in the media and stuff. If I could show you my screen right now, you'd see all my moving averages. No, you wouldn't, because I don't have any moving averages. I literally don't have a moving average on my chart. So you can see how much value I put into death crosses and golden crosses and all that other fun stuff. My technical analysis, and Joel, you play we're very simple with our technical analysis. I could literally teach you technical analysis in the next 2 minutes if you've never even heard of it before. It is my style of technical analysis is support, resistance, and trends, and that's it. And Jeff Mackey said it best. And Jeff, if you're listening out there, and I don't think he is, but he always said it best on Fast Money. He's like, take your purple crayon and draw a line. When it comes back down the line, you buy it, and and you play it off that line. You know what? That was the best investment advice, that I've heard on one of the best investment advice. The purple crayon trick. It works. Make sure it's purple though. But I tell you, support, resistance, trends. That's all I use. I don't use any moving averages, oscillators, none of that other stuff. support resistance trends.
Yeah, and who was talking? Oh, Carter Worth put, he's looking for 135, but he better get his bid out.
He's looking
there.
for 135 when it was 155, so he's already 10 points down. Now Carter, and he keeps it somewhat simple too. I mean, he's looking at support resistance trends as well. So I actually like Carter Worth's technical analysis because it is simple. But when you get these technicians coming on and they're talking all these funky terms, half of these things, I've heard of them, but I don't even know what they are. And I don't care to know what they are. You want to know what? Because I've been in bright trading here. We had 400 traders in our firm at one time. So it's not like we're a small prop firm. These are some of the best traders. Some of them aren't great, but some of them are really good traders. Some of them came from the floor. Like when we started in 1999, half of the guys came from the floor. So, these guys, are consistent money makers there. And I'll tell you, like in our Detroit office, with the 20 guys we had or 25 guys in the Detroit office, how many really were technicians, like really checking out charts? Yes, it's got some value. But we weren't like, crazy. And whenever you saw somebody coming in and they had all these lines on their charts and stuff, and you'd see like those people never made money. Now, maybe there's the odd person. By all means, some people are going to send me hate mail or hate Twitter on this through the tweets. But by all means, if you're making money with your current system, continue to do it. But if you're just starting out and you're trying to learn technical analysis and you're reading these huge technical analysis books or taking courses and trying to figure it all out, you're going to make it way too complicated, in my opinion, to actually be profitable. Keep it simple. Support resistance trends. That's the way I've done it for 18 years. I've been profitable every single one of those 18 years. And obviously, technical analysis is only one part of what I use. I use a lot of order flow, and I consider myself more an order flow trader. Yeah, I consider myself more an order flow trader, but I do use the technicals as well. And you keep it simple, like with the way you do your levels and stuff too, Joel. You're looking at different old highs and old lows. And those work. And why do they work? It's because the order flow makes those charts happen. You see 1, 2, 3 highs in the same area. What do you think, Joel?
There's a
when you see 3 highs,
institutional seller, big seller there.
There's somebody sitting there with an algo dumping stock. And if you've got, $1 million to go, Fidelity's selling 1 million shares with an algo right here, it shows up on the chart with a couple highs in the same area. That's where it's like, okay, well, we got a big fish here that needs to get out. Sometimes big fish can't get down on his order, and that'll make the stock sell off from that level. Tries, can't get through the level because there's an institutional algorithm that's just huge there trying to lighten up their 1 million share position. They get rid of 50,000 and they can't, fill the rest of it, and the stock goes the other way. So stocks always follow the path of least resistance. There's a reason behind the technicals, and that is order flow.
And the good thing about when you're doing like the resistance levels, if it ever breaks or when it breaks a resistance level, and let's say, GE finally clears $14 after hitting 14 8 days in a row, rallies up to 14.30. You can make a reasonable assumption that when it comes back down to $14, that you're going to find buyers there. And so old support, can be new resistance and vice versa. But we're mixing things up a little bit today with an 8:50 guest to accommodate Mr. Hirsch from Stock Traders Almanac. So little different show today. So let's go get Mr. Hirsch. And Dennis, you could stick around, throw any questions that you have. And
I always like Jeff.
Yeah, he's great. Let's go get Mr. Hirsch.
And welcome back, everyone, to PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick, Ron Now, Jeff Hirsch, editor-in-chief of the Stock Traders Almanac. Jeff, how's it going this morning?
It's great. How you guys doing?
We're getting by. We're getting by. It's been a while since we had you on. What has been on your radar in this extra or mildly more volatile market than we had last year?
Mild's a good word because it's compared to last year, it's a lot, but historically it's relatively mild. My old friend Larry Williams sent his VIX fix indicator chart over yesterday just to look at it. Well, I guess it's some smoothing he has in there, and historically it's not that volatile, but comparatively it is. So, well, we started out with a pretty strong January, which was super bullish, with up Santa Claus rally, up first 5 days, up January barometer. That's the trifecta. Then we had a down February, down March. That's kind of really negative. We just put a post out on that, which shows a pop in April, which we're getting sort of right here, and then a kind of dreary year. And then the comparison that we're looking at right now is 1994. Kind of a dull, boring, sideways year. And I put up a chart on my blog yesterday. I don't know if you guys want to dial that up for people. It's, the Tumblr blog right off of my website, where I layered in the current year versus 94, Dow, S&P, NASDAQ, and it's just, strikingly similar. And I suspect we're in store for that. We got midterm years, both of them. We're looking at a lot of activity coming out of Washington, which, as we say in the intro of the Almanac, there's a symbiotic relationship between Washington and Wall Street, and we're seeing that right now. Whomever goes down there, and somebody asked me last night, what does the Almanac say about all this tweeting and stuff? And I said the Almanac doesn't say anything about that. The Almanac says a lot about second years of first-term presidents, that are starting to push through a lot of less savory policy initiatives. So that's the kind of things that are on my radar right now. I mean, there's technical stuff. I heard you guys talking about a lot of technical stuff with an individual stock. I'm not sure which one it was, but we're looking at a potential W swing bottom. We got to clear that high in it was at March. Concerned about that. So.
Hey, Jeff, Dennis Dick. Yeah, we were talking last few days. We were talking about this potential for the W. And yeah, I was just saying how I keep my technical analysis simple, but I do like those W bottoms when we get them. It's still intact. It has been the longest little right part of a W, though, for the last month, basically. We've been in a trading range in the SPY from 258 to 266. So you're looking for a little upside here, too, potentially?
Yeah, but last month of the best 6 months. The one thing with the W though, I usually like the right side higher than the left side. Isn't that?
Yeah, I know. It's not happening now. Starting to get concerning.
Yeah, and then you look at the midterm year worst 6 months. It's more pronounced, and we got the weakest 2 quarters of the whole 4-year cycle, Q2, Q3 of midterm years. But that sets up, the buying opportunity, the bottom picker's paradise, as we call it in the Almanac, and you got the best 3 quarters of Q4. Midterm year this year and the first 2 of pre-election year. So, it's going to be some rough sledding. I don't think the big bad bear's around. I think we had that. Doesn't mean we can't get a little Ned Davis research defined bear, 13% on the Dow over 145 calendar days, or somewhere in between there and 20%. I don't suspect we're getting all that, but it's time to get a little bit cautious, maybe get ready to trim some losing positions or underperformers, that kind of risk off play.
We're on the line with Jeff Hirsch. He's the editor-in-chief of the Stock Traders Almanac. Jeff, I mean, a lot of, starting with your dad and continuing on with you, you guys have compiled a lot of information. Have you tried to do any systematic trading or algorithmic trading off the data and the information that you have?
Yeah, I'm not sure if I call it algo, but it's definitely systematic, where we combine the different seasonal patterns for the trading days of the year and month with the 4-year cycle year, with a little overlay of our worst 6 months. Whereas you're trading the best and worst days of the month, you're getting a little leveraged on super conviction days with frequency and magnitude, and even a little bit shorter on the bearish days. So we have a fund that we are involved with. I'm the chief market strategist of Probabilities Fund Management LLC, and they have a mutual fund that trades based a lot on the seasonal patterns in the Almanac, like I mentioned. So
What's
done
the
quite
fund?
well over the past 10 years.
What's the symbol on the fund?
PROTX.
PROTX. Okay.
Been with the bearish activity we've had in the best 6 months, it's taken a little bit on the chin the beginning of 2018. But when it started in 2008, it did too. And we were up 5.25% in 2008 versus the market being down a whole lot. So that also concerns me about the rest of this year when we're having such a weak beginning. And, bad best 6 months are not great for the market.
You're also the author of a book, The Little Book of Stock Market Cycles and Super Boom, Why the Dow Will Hit 38,820 and you can profit from it. I just want to know when so I can get my order out there at 38,819. So just talk a little bit about your book, the cycle, and how you came up with that target and when we're going to hit it.
The dates or the year we have is 2025. I put that forecast out initially in May of 2010 with the Dow around 10,000. Got a little, WTF from Ritholtz and some other friends who thought it was a bit crazy. But then you look at it, it's only about a 5% compounded annual growth rate from the close of 99, which was, the end of the bull there. It's based upon a cycle pattern that Yale discovered back in 76. It's 500% moves after war and inflation, like we had after World War I, World War II, and this was the post-Vietnam boom, which we know did even more than 500%. And you get that inflation and peace, and also what we call a culturally enabling paradigm-shifting technology. You can hyphenate that if you like. Things like the automobile in the 20s, all the military-industrial complex after World War II with television and the Nifty 50 and all that stuff. And then, of course, the information revolution in the 80s and 90s. And when we had the, first low point in 02, we started looking at it there. And then we had that ultimate bottom in 09. And that's when we began to formulate the concept that this pattern was repeating itself. So basically, the intraday low of March 6th, if memory serves, of 64.70, you multiply it by 6, which is a 500% move, and you get 38,820, which rhymes with Yale's initial forecast from 76 for Dow 3420 by 1990, which did just about, the S&P did it by July 1990, the Dow hit 3420 in 92. So
wow,
now we're on the way to that, and it's not so unbelievable.
Yeah, that's some history there. We've been on the line with Jeffrey Hirsch. He's editor-in-chief of the Stock Traders Almanac. Great information there, Jeffrey. Great having you on, and we'll dial you up again soon.
Thanks so much, gentlemen. Take it easy.
All right, S&Ps are just hanging up here. We made a high 26.57, up 1375. I mentioned this was an area of contention yesterday. I don't know. I'm going to have to wait for a little bit of a pullback here, and maybe I won't get it. Maybe we'll run right up to Tuesday's high, but I'd at least like to see a dip, in the upper 2640s, maybe 2647, 2648 before I dip my toe in the water. Big earnings day tomorrow, so look for some trimming positions and maybe some of the bank stocks. Maybe keep an eye on yesterday's ranges. Dennis, any final tips for our traders and investors?
Banks look like a bounce back day here for them today. Obviously, they got hit hard yesterday. TLT is down here this morning. Banks are showing some life. Just be cautious at yesterday's highs is what I will say in the banks, because BAC, you can see candle yesterday. Yesterday's high is 30.24. It's just trading under that there right now. And as these banks are bouncing this morning, I can't help but think about yesterday's high, 1181, and JP Morgan, Goldman Sachs. You'd think up near the 255 or 254.85. We're right there right now. So a lot of these banks are showing a lot of strength here this morning. Just be cautious at yesterday's highs, though.
All right, Spencer, what's on the docket for our final show of the week?
Yeah, hard to believe. It doesn't really feel like Thursday, but then again, here we are. So on tomorrow's show, we are going to be joined by Joe Saluzzi from Themis Trading. Last time we spoke to Joe, he was on our crypto special back in middle of December, but he is really a market structure guru. So we'll let him and Dennis just kind of nerd out about that tomorrow for a few minutes. And he's always great. So that'll be on tomorrow's show. Want to thank our guests today, Tracy Shuchart and Jeff Hirsch. If you missed any part of the show, you want to listen to it again, hear my lovely voice, you can do so on our podcast on iTunes, SoundCloud, and Stitcher. Also on YouTube and soon to be on Spotify, Google Play, TuneIn, and a few other platforms as well. That'll be today or tomorrow at the latest. So thanks to all you who joined us in our chats today on YouTube and premarket.benzinga.com. Hope you all have had a good morning and have a good rest of the day. And we'll see you folks on Friday. Have a good one.